Generally, when we think about the US GAAP, we realize that it is a vast and complex framework. Many people who are not familiar with US GAAP still manage to work under it. But how? What kind of knowledge should they have? Similarly, in India, Indian GAAP is also extensive, yet many accountants work efficiently under this system. The reason is that accountants working under the Indian GAAP follow a specific approach without overthinking every detail, just as it happened with US GAAP. In today's video, I will explain you some key difference between US GAAP and Indian GAAP. I will also share some my personal insight on the difference that I find interesting. I will start with some of the most important differences you should know when working with GAAP along with examples. The number one difference is accounting approach. Indian GAAP is principle based, but US GAAP is rule based, meaning more detailed guidelines and less interpretation. Example, buying a movie ticket. Imagine you buy a movie ticket for $10. How revenue is recognized? Indian GAAP, the theater can use judgment and recognize the full $10 immediately when you buy the ticket, since you have committed to watching the movie. And as per US GAAP rule, US GAAP follow strict rules. The theater must wait until you actually watch the movie to recognize revenue. If you buy the ticket today but the movie is next week, they can't recognize revenue until the show happen. Apart from key difference, we also have an important update for you. If you want to learn about freelancing and QuickBooks, we are hosting a free webinar on the upcoming Sunday. You can join by filling out the form, link in the description. Let's continue our learning for US GAAP and Indian GAAP. The second difference is revenue recognition. US GAAP follow ASC 606, which is similar to Indian AS 115 but stricter about contract modification and performance obligation. Number 3 is inventory valuation. In India, you can use FIFO or weighted average, but in the US, LIFO is allowed. Number 4 is financial statement. Indian companies follow Schedule 3 format, but US GAAP allow flexibility with industry-specific presentation style. Number 5 is extraordinary items. In Indian GAAP, India disclose them separately, but US GAAP no. Extraordinary item allowed in financials. Number 6 is consolidation rules. US GAAP use a unique variable interest entity model for consolidation, useful for recognize hidden control over subsidiaries. Number 7 is lease accounting. Like Indian GAAP AS 116, US GAAP require most lease to be on the balance sheet but with different classification rules. Number 8 is goodwill treatment. Under US GAAP, goodwill is tested for impairment, but private companies can amortize it over time. Number 9 is deferred tax difference. Indian GAAP focus on timing difference while US GAAP use temporary difference. Small change but big impact on tax calculation. Number 10 is R&D cost. In the US, most R&D costs must be expensed immediately except software development, which can be capitalized. So these are the US GAAP and Indian GAAP differences. By understanding these key differences, you can feel more confident about working with US GAAP and Indian GAAP. If you found this useful, don't forget to like, share and subscribe for more insight and accounting and finance. Remember, learning never stop. Keep hustling and keep moving.